Bugs off the higher than expected jobs data that came out after the last FOMC meeting. Markets rip, dip, and skip-it-a-doo-dah to higher levels after a 5-day mini dump for the crypto markets. But are the moon boys out of the woods? Or do the baby bears have a secret weapon up their skirts? Just moments after Jerome Powell's latest speech given today on February 7th, the markets actually had a little bit of a move to the upside here, but are kind of equalizing back around previous levels. However, one thing to take away from the speech Jerome Powell gave was that even though we got new jobs data after the FOMC meeting that potentially could have hinted that the Fed is going to continue to raise rates at least a little more aggressively, he did not actually have that tone in his speech, considering that he could have taken advantage of that and, tried to express a lot more hawkishness, which he did not do. And right now the markets are liking that. The markets are absolutely okay with that at this second, as right now the SPX is up a little bit today, and the DXY again ran into a roadblock again, right at about the 105 level. It actually moved all the way up to a little, right around 104, but so far after a mega 3-day pump, the DXY doesn't seem to actually, so far, again, continue to want to go above that. And so far after breaking down out of each of these ranges, the DXY has been unable to reclaim any of these levels, which again, if the DXY is not able to do that, then again, that's very good if you're invested in the stock market or crypto and you want it to go up, because the DXY looking weak has only been helpful for crypto in the stock market. And Bitcoin made a move significantly above 23,000. Remember, yesterday we got a bullish cross for Bitcoin, a golden cross, with the 200-day going above the 50-day moving average, and on the weekly chart it got a death cross. But again, as we've talked about before, the death cross takes much longer to form if it's on the weekly, because weekly is a much more lagging indicator, and obviously it takes a lot longer to get there. Whereas these daily moving average crosses are much more of an indication of the momentum in the more near term, whereas weekly crosses, obviously they take so much longer to form. By the time they do form, pretty much most of what happened during that trend to cause it to get there is already over. A longer term cross is usually less indicative of what is to come than a shorter term cross. And so with that being said, the shorter term cross is a bullish cross here, and we have seen the momentum of crypto really pick up over the past couple of weeks, pretty much just as January 2023 started, completely opposite to what January of 2022 was. January 2022 was the very beginning of massive dumpiness that lasted an entire year. And January 2023 for Bitcoin and crypto was only pumpy so far. So will it continue to lead into the multiple quarters potentially of pumpiness for the crypto markets? But with the markets kind of moving up because of Jerome Powell's speech, and with the DXY moving down and crypto moving up as well, I think that overall that's basically the reason the markets got a little bit of a boost. However, I personally think, it is kind of a short-term boost. And how much weight will it have in actually pulling the markets up in the short term? Because again, if the Fed actually does what it's going to do, then over the next few months, it's very likely the stock market's going to pump and crypto will as well. But in the very, very short term, after Bitcoin has spent roughly the last 30 straight days going up, is it time for a pullback down to some key levels? And again, the key levels that we talk about on this chart specifically, obviously the daily moving averages down even a little bit below 20,000 are still very big. Realistically, guys, the real pump will start when we break above pretty much 25,000, which is exactly where this death cross has formed. It's right where the 200-week and the 50-week moving average are meeting right now, right at the $25,000 level. And that will be gigantic for determining if this move really has a lot of legs, because whether we get a pullback to 20K or something first and then move up, or let's say we actually had a move above this level, the $25,000 level first over the next week in like a very, interesting shakeout type scenario where people like myself and many people expect maybe we'll get a little pullback first. Let's say if that doesn't happen and we just move up, then again, that would shatter. Imagine the shorts that would get liquidated if that were the case. But realistically, breaking 25,000 is where things get really bullish. Not to mention 25,000 is exactly where this last lower high was, the last really significant lower high was. And, after that, it's into the mid 30,000s and reclaiming back some of the levels that we were first visiting back in the summer of 2021. So it's very clear what needs to happen. 25,000 is the make or break level. That is the most important thing. And it will be broken sooner than later if the stock market continues to rally here. The stock, for example, the SPX's level to break is right around a little over 4,300, which it rallied all the way up to almost right about 4,200 just recently. So again, these are very critical moments. We're on the verge of breaking some of the most key levels here. Amazing, interesting times to be trading this market, as again, most profit is made in very small amounts of times during these big swings here. And again, I think that's what's so exciting about some of these moves here. But overall, it seems like the Fed is pretty confident that, yes, we're going to have probably one or two more rate hikes, probably 25 basis point hikes, and they might have to hold these rates at these levels throughout the rest of the year. But other than that, a pause and a pivot are more on the table now than they've ever been over the last 2 years, and these markets are forward-looking. So by the time we actually see that policy shift, markets will have already pumped massively by then, most likely. So pretty much the trades, the best trades are already currently open or are being opened now in anticipation of what will be seemingly so far, again, potentially multi-month, multi-week relief. But again, in the very short term, it's a little undecided. I personally, I would feel better if we did even just retest, backtest any level, even if we, like we said here, if we even just came back and backtested this level right here, about 21,000. Doesn't have to go below 20K, but some sort of backtest is always, in my opinion, more confidence building in terms of trades. But again, during some of these reliefs, like we've seen in the past, if we kind of zoom out here, during some of these reliefs, the price doesn't really pull back all the time. Sometimes it just keeps going. Just like the relief of 2019, we had a couple weeks trading sideways after a massive pump, and then did it again, and then did it again after a few weeks trading sideways. So, I can just overlay that for you here. If we did anything similar to that during one of the big reliefs, then again, this is what basically the charts would look like. So you guys, channel, make sure to like, subscribe, turn on those ghost notifications, never miss the absolutely time-sensitive alerts. Take advantage of massive bonuses with BITGET and BitGet below, specifically using BITGET, 0 fees for spot trading. In addition, no KYC required. It takes 30 seconds to sign up, and there are tutorials in the description below as well. Without further ado, it's free.